Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down the notable moves across financial markets in 20 minutes or less. Make sure you are subscribed to our YouTube channel. Hit those notifications so you never miss an episode, so you're always prepared for the week ahead. I hope you had a good week out there. Let's jump right into it. It was a nice bull stampede to the upside. Not a whole lot of new, encouraging, optimistic news, frankly. If anything, it was probably a lot of pessimistic news, but markets rallied anyway. That's an important distinction and takeaway from today's video. It wasn't all roses, though. I mean, we started the week Monday with a gap down. Things looked messy, looked like we were going to roll over, perhaps retest those lows. It got everyone on the wrong side of the boat, and then we V-shaped and kind of just rallied throughout the week. Now, really nothing new has progressed with trade. I mean, the Trump administration is still kind of sending out headlines that these negotiations are happening. Countries are saying they're not happening. We really don't know what's going on in that respect. President Trump also now kind of backpedaling. You know, is he going to fire or replace Fed Reserve Chair Jerome Powell? But now he's not. So that was, you know, a kind of a 180 and a flip there in terms of market expectations around the Fed. But, you know, when we turn to the technicals here, there were some key takeaways this week. I mean, we had a bullish engulfing Nasdaq 100. I think all the major indices weekly engulfing bar that we're going to take a look at. We had a high volume reversal in GLD to the downside. We also had the dollar kind of reversing to the upside. So we had that safety trade, that fear trade, that sell America trade on the dollar down, rates up, stocks down, right? That kind of has dissipated a little bit, and risk is being put back onto the table. Now, maybe it's still by traders and hot money and not the true long-term capital, but it was, you know, encouraging to see, or at least a breath of fresh air to see the risk side of the market rallying and leading this week for the first time in a real long time. We're getting now this mix of technicals where we have kind of daily uptrends that are forming, or these, you know, momentum breakouts on the daily chart, but these longer term charts are still kind of messy to down to lower highs. So it's a cross current kind of messy spot in the market here. There's opportunity on both sides. And of course, we still have earnings season. So we're going to talk about all of that. Before we do, we want to shout out our sponsor, Investors Business Daily. IBD makes this show possible. They've got two great products. They got their market surge research platform, and then they have their IBD digital. We've got links to both of them below. Check them out this weekend. Do some homework with IBD. They've got some great tools out there that help me every single day navigate these markets. So with that, let's get right into it. All right, here we go. We've got some charts in front of us. Warden TC2000. If you need another platform for you to trade with, check out Warden TC2000. We support it here at The Traderist. We've got lots of cool things built for it. You can check out our website, thetraderist.com, and see some of those downloads we have available for Warden TC2000. Now, let's get into the numbers here. Right-hand column, 1 week returns. Take a look at this. Bright green across the board. S&P up 4.5%. Nasdaq up 6.5%. It was, again, a bull stampede to the upside. Volatility also coming out of this market. If you would have asked me a week ago, 2 weeks ago, would the VIX be under 25 right now? I would not have thought so. So we'll see how long it can last. I'm still a little doubtful that we can stay less than 25 here in the VIX for very long, but I'm not going to argue with the market. 24.97 going out here for the VIX. Now, here's something I want to point out. This is our smart trend filter indicator down here. We've also got some support and resistance indicator. So there's lots of dots kind of happening here, but this is the daily time frame on the 4 US averages here. And you can see that this week we got buy signals printed on the daily chart for not the Dow, but everything else. And that means that the daily chart is starting to enter this daily uptrend per this indicator that we've built out. Now, if we flip this, though, to a weekly time frame, you're going to see that we are still very much in a downtrend on a weekly, downtrend on a weekly, downtrend on a weekly, red dots across the board. So this is where your time frame, your time horizon is really going to start to matter, because there are going to be tradable opportunities in the context of perhaps a negative or sideways market. So let's keep that in mind as we go throughout this video. If we take a look at sectors here, bright green across the board, tech was the big leader. And this is, again, a changing of the guard. We haven't seen tech and risk assets really lead here. They have been leading to the downside for most of this year, 8% higher here as we start to move through earnings season, and we're going to look at a few of those companies. Consumer staples, real estate, utilities were the bottom three. Now, if we take a look at sector trends here, again, this is our smart trend filter indicator. It's available for TC2000. It's also available for TradingView on our website for download, but notice all of the daily buy signals that are printed here in most of the sectors this week. That shows that there's stabilization, that there's strength under the hood, and that we're starting to hook back up on these shorter time frames. Once again, if I throw a weekly chart on here and we look at our weekly smart trend filter, because this indicator is fractal, it can go across different time frames. We are basically in downtrends across the board, or maybe at best sideways, yellow, indecisive at best. So again, time frame matters here when you're playing these trends, these swings, and these multi-day opportunities. Let's take a look here at market breadth this week. We can look at the 52-week highs and lows and really see that there's not a whole lot going on right now. Again, this is a longer-term breadth measure. It's one of my favorites, but when you get inside kind of these wider ranges after volatility has expanded, you're really not at the edge of highs or lows. You're not seeing a whole lot of signal in this indicator right now. We're basically not seeing highs, not seeing lows. We're still kind of just trading in this middle range, but we can just be on the lookout, be on alert for when this starts to expand one way or the other. I think that would be the big tell on the next more meaningful direction in this market. If we take a look at just advancers and decliners with these dials on the right-hand side, you can see, again, just a positive breadth week in terms of the sheer quantity of stocks that were moving up this week. Let's take a look at our macro slide. You can see that the dollar index did catch a bid this week. Finally, it's been just sold off relentlessly. So it was nice to see the dollar at least stabilize a little bit here. Meanwhile, interest rates, 10-year treasury yield coming down a little bit. So that was good to see. We didn't continue to accelerate up. So again, things kind of working in the right direction. If we take a look at commodities here, Bitcoin at the top of the list, up 12% this week. We'll talk about that. Copper, silver also having a good week, and gold finally cooling off here. So let's take a look at some charts. Let's kick it off with the S&P 500, and let's start off with this weekly time frame, because again, I think this speaks a pretty picture says 1,000 words. And I think this weekly bullish engulfing bar does tell the story. It sets the tone here for the S&P 500. We started the week at the lows with this gap down. So this was Monday's session right in here. And this, I think, after last week's kind of slide lower, I mean, this really set an ugly tone, an ominous tone to start off this week. I think it got a lot of folks just, again, reducing risk, bracing for a retest of the lows, and that did not happen. We failed to find follow through lower. Tuesday, we had a nice turnaround session. Wednesday was a gap up session. Thursday was continuation up. Friday was continuation up. So you had to be pretty quick, nimble, and active, and be flexible enough to change your mind here on this 2-day kind of turnaround. This was a very quick catching folks off guard here, and it was meaningful. So we now have a more sort of prominent higher low to pay attention to. There's going to be a lot of emotional charge around this 5100 area that kind of coincided with the low here on that initial retest day from the 9th of April. So right in here, this 5100, I think you got a nice kind of pocket to look for in terms of levels if and when we ever get back down there. But for now, buyers are in control of this market in the short term. And I think if you're super tactical, I think the lows from Friday, the highs from this big expansion bar on the 9th, I think this is going to be an interesting area to watch right around 54.60. It's going to be very tight. It's kind of an upper level momentum tactical area that I would be watching for. But if you're looking to manage risk pretty tight and catch maybe a changing of momentum, I think this is going to be it to pay attention to next week. If we start to slip below 54.70 or so, then you might just want to be careful of getting sucked back down into this range. Doesn't mean we have to roll over and totally cascade to the lows, but it just might mean that this momentum has, the balloon has been popped a little bit if we start trading and getting trapped back below that area. But right now we are headed into this open gap here, which didn't quite get filled in the S&P 500. And right above that, or right through this really, as we can just start to get above this old range here from the middle of March, when we initially had this leg down before things really hit the fan. We had a more gradual kind of sell off. This is where we found support, and you can see the market now just starting to get back into this area. So when I look at this market and looking at the action this week, I think you've got to respect the move to the upside. I think you can still have this, sort of dual approach in your head where in the short term that, we're probably going to probe higher here, but longer term or medium term, we're not quite out of the woods yet, right? And that's kind of the way I'm looking at this market. It feels like there's more room to run to the upside. It feels like folks hate this rally. They don't believe in this rally. That's probably why it's going to continue to rally. But I do sort of agree that I don't know and I don't see a clear picture of us just lifting up and forgetting this ever happened and moving back to the highs above 6,000. Like that still seems like a stretch to me, but I do think we could trade up to, 5,600, maybe even 5,750, get back up into this range and, spend some time there before a more meaningful move. So I do think that there's potentially some more room to run right now to the upside, but I wouldn't exactly want to overstay my welcome, right? So that's kind of the way I'm sizing up this market right now. Bulls got that momentum. Let's see how far they can take this, and let's just continue to keep an eye on these dynamic kind of situations that are happening on the macro front. Throw Ukraine in there, throw earnings in there, throw the trade landscape and negotiations. There's a lot going on right now for the market to sort of chew on. If we take a look here at the Nasdaq 100, you can see that we did get, again, a similar behavior this week. Monday kind of coming in aggressively selling, looking like things are getting dicey, and then suddenly the bid, kind of steps into this market, and then we float higher throughout the rest of the week. Again, a big bullish engulfing week here, and one that got us back into some of this range here from that mid-March point. So once again, I do feel like the Qs, can continue to push here, especially as this market gets increasingly difficult to chase right now, and maybe some shorts get squeezed that are, looking at this more bigger macro uncertainty, but might just be a little bit too early on this leg. So the Qs looks like there's room to run to maybe the mid 480s or so, and we'll see how this gets followed up next week. Russell 2000, again, I haven't really been putting too much attention on the Russell 2000 just because it's kind of still stuck below some key levels. But of course, 4% up week, bullish engulfing week. Again, it looks like that could squeeze as well right now. So that's kind of my read there on the major markets. VIX back down below 25. We'll see if it can stay down here. But again, I do feel like we're in a, kind of a mid 20s floor, felt kind of reasonable for the VIX. But if we continue to rally, maybe we come back down and settle at the lower 20s, right? So that is possible. I was expecting more of a, rally with a higher VIX, right? Just keeping elevated volatility, but still rallying. Those things can happen. But for now, the VIX is coming down. And, for a lot of professional money managers that are looking at volatility adjusted, position sizes and all that stuff, that helps, potentially squeeze the market as well as folks come back in and feel safer allocating to the market. If we take a look at gold, so GLD on the daily chart doesn't look too bad, but that weekly chart, I mean, look at the volume that traded this week. I got dollar volume on my chart down here, so pretty much the highest we've seen since, in the past several decades. And that looks, a little bit tired, a little bit like some exhaustion here. That feels like it might need more time to now consolidate. So if you're, missed the rally, if you think that there's more economic pain ahead and GLD wants, deserves a position in your portfolio, then keep an eye on it these next couple of weeks as it cools off, pulls back, retraces. Could be your time to get back involved in it, but it's had a really, really strong run. And so a little bit of rest there. While some risk assets get the love is, seems like it might make sense right now. What else do I have? Silver, kind of a different picture, still up this week. Oil was, kind of an inside, not quite an inside week, but just kind of a digestion week here, not doing a whole lot. So commodity land, that's about it. Bitcoin was meaningful this week. So Bitcoin weekly chart, you can see going out at 95,000. So Bitcoin was up about 12%. That's IBIT around 54. We did break through. I think it was Sunday night futures is when it started to really kind of squeeze and push. It broke out from this tight sideways range. We were going sideways at this 84K area. And then we really had that squeeze up, and it's basically continued pretty much like the stock market. Although Monday was an up day for Bitcoin, Monday was a down day for the stock market, and then this kind of just continued to push throughout the week. So we've reclaimed the bottom end of this 91K range from earlier in the year, and again, we'll see how far this can squeeze and push it. It's overbought, extended in the short term, but there's good momentum behind it, and we'll see if this can continue. I remain long Bitcoin, and so do our trading systems as of this week. So we're back in that Bitcoin boat. We'll see if that can continue higher right now. Let's take a look at some of the mega large cap stocks. So I think Tesla really is emblematic of this week and the rally and the sentiment shift. So Tesla reported by anyone's standards abysmal numbers. It was pretty disastrous in terms of slowdown and lack of profitability, let's call it. But nonetheless, the stock moved up and rallied a total of 18% this week. And there's always my favorite reactions in the stock market is when you have like terrible news and something goes up, or if you have great news and something goes down. Those are always my favorite moments because that is actual signal, that is positioning, that is showing you where the market expectations were and how the adjustment or the delta lies. And so Tesla, really getting a nice push here. I wouldn't really be chasing it personally, but it is great to see, this rally up here. And I think it just, again, speaks to how, just offsides, sentiment was terrible, and really extrapolating to the market, right? Like, again, this week, I don't think there was anything that justified of such a big rally in the stock market, but when there was so much pessimism and doom and gloom priced in, sometimes it doesn't take much to kind of push that spark to the other side. So again, maybe the worst is behind us by Tesla, right? And that's what folks are looking at. But we've got a long list here of again, very growthy kind of risk prior darlings that were up big this week. ServiceNow up 22%, Palantir up 20%, Tesla was up 18%. APH, don't know it. MicroStrategy, do have a position in this, up 16% this week. AppLovin, 16%, Shopify up 16%. So these are more of the kind of prior leaders in the stock market, and they are moving. Again, that risk appetite was on the table this week. So what we're going to have to decipher now is it, again, just traders, momentum traders, liquidity's light, and we're pushing back up here, just working off oversold conditions, or do we have more meaningful structural lows that are getting put in by stronger hands? That is yet to be seen, and that's what we're going to have to wait on and continue to analyze each and every week. So takeaway this week was markets really resetting those oversold conditions. There's a lot of kind of two-way trading right now. I think we could push up, but don't forget, we are still kind of in a structurally difficult environment right now. So just be careful getting too attached to your positions. If you're a swing trader, if you're a tactical trader, if you're raising stops, if you're managing risk, I think you continue to do that and don't get lulled into a sense of complacency here, even if we do grind higher. So that's what I have for this week. Our tactical trading system, which is having a great relative strength year, but our tactical trading system put on some short exposure on Friday, and it's now net short just on the margin. It's basically all cash, so it's not expressing any big idea right now, but that goes to show you again just where some of the tactical exposure is getting put on in terms of our trading systems and our algorithms. So if you do need some assistance, or if you're looking for a new process, workflow, consistent rules-based workflow, check out the trading systems we have at our on our website, thetraderist.com. And with that, thank you so much for tuning in. We'll be back next Friday. Don't forget to subscribe to the channel if you like this video. Have yourself a great weekend. We'll see you back here next episode. Take care.